So guys, welcome back to the video. And now last video we did a top-down analysis on the volatility turning this, and I'm going to be doing another top-down analysis on the jump turning this. We all know what jump turning this is, as explained in the last video. So I'm just going to be doing a quick. I'm not really going to make it quick, but I'm going to make you guys understand the directional flow of the market and how to potentially get yourself a good setup. So I will mark the 15 minute ending because remember our entry is always going to be on the 15 minutes. I noticed something about the trading Deriv. It doesn't allow um, us to go beyond November. Okay. Okay, it doesn't allow us to go beyond December 25 of last year. I want to highlight this. So going back to our daily time frame. Now we have our 15 minutes ending, and normally I would have done a full top-down analysis from a very far, but I don't want to go too far in analyzing the market. So we just start from where I highlighted from. So looking at the market from previous movements, we can see the market has been making series of lower lows to the downside, which indicates the market was in a bearish momentum for a while. Then started to switch momentum starting from this change of character. Then change of character reacted to another block that formed another breaking structure here. So these are a break. Now, highlighting all of this, we'll go down to see how the market responds to structures like this. Give me a sec. This should tell you that the market is now in a bullish momentum. So you go on the 4 hours to follow the bias of the market. So as you can see, after our change in character, you can notice another block that formed right below and has a after the sweep followed by a look gap. Remember in our last video I highlighted some things you should always follow, which are the liquidity, your breakout block, your fair value gap, your other block, and another thing again, market structure. So taking note of all this, you'll be able to analyze the market well. So after a change of character, what you expect is the retake to the downside. I'm going to alert all this. So you see how the market reacted previously to this zone, this fair value gap, your break that happens here, and your other block. Same thing that happened here. So going on the 1 hour, 16 minutes. You can see on the 1 hour that price before making this major swing to the upside, price was making an internal structural shift to the downside, which is this too. This is the break. This is the break. The same thing that happened here. Other price broke below this. Expect a retest to the downside following the continuation. Even before the other block. So taking note of all this, if you want to enter a trade before the major swing, that is after what I say, there's accumulation, manipulation, and distribution that moves the market. So what I say during the accumulation stage, if you want to get a good trade, you should look for a valid fair value gap in 1 hour zone that causes a break of structure. This is a valid fair and this is a valid order block rather that causes the break, internal break that we're seeing here. So this is the internal break. Then after the fair value gap, we have the order block that price retraced from. So if you are taking this trade, you will have gotten a good, nice win to reward ratio. So that is just a nice swing. So when price has gotten to your point of interest, you go on the 15 minutes. Always go on 15 minutes for the point of interest. You look for market structure shift on the 15 minutes that will change your market direction. So on the 15 minutes, as you can see here, you can see a structural shift after this swing high. Market retested to another block. Got this last candle is another block. Let me highlight it so you can see it. So normally you will have taken your entry from here. Got the fair value gap. You take entry after the market shift. That's to tell you that the market is ready for an upside movement. So putting your stop loss at least some few pips below the original pip, you'll be able to get yourself a nice win to reward ratio. That's bagging two trades and just understanding the market bias. So going back to our 4 hours time frame, we can see after price broke above this, started making lower lows. So we'll take advantage of this low that was making to the downside, because we know there is a other block below that needs to be filled, because you know there's a fair value gap it's right. I already highlighted it here. So going back to 1 hour time frame, we look for a break in internal structure to the downside. So market making series of minimum higher lows and lower lows as you are seeing, but this is just a direction that causes a break. So now that we have gotten our internal break, we're expecting price to retrace at a significant level, probably a um 3 0.382 level to retrace from. If you cannot get a fair, if you cannot get a valid order block in your setup, you use the Fibonacci retracement to get a possible retracement zone. Now, I've noticed price always tend to retrace at this zone, the 0.38 zone more. So before a 1 hour retracement. So keep that in mind. You know that even after this is liquidity being swept, even on the 1 hour time frame. So we know there's liquidity here. What again are we expecting? A retext to the point of interest after the liquidity. So knowing that your price will react there, you get yourself another nice win to reward ratio of a sell to your point of interest again. So here's a break. So when price got to your order block on the 1 hour time frame, we go on our 15 minute to look for internal structure shift. If we have, so the only shift I can see that we have here is this major shift that happened above there, which is our market structure shift. So if I go on the 1 hour again to see this market structure shift and where it's going to retrace from to the upside. So keeping this market structure shift in mind, market start to retrace to the downside to retest at. So after the market shift, we're expecting a retest to this other block. But since price did not really even go to this other block, which makes before price started to move to the upside. So price didn't even get to this other block before it started to move to the upside. So normally you won't have entered this trade. I won't have seen an entry in this trade. So after price made the break to the downside, we can see on, on our 1 hour we have a market shift to the downside, and market continues to make all those shifts, making internal structural break to the downside. And right here, market gives us a nice structure before breaking to the downside here. And kept on breaking to the downside on the 1 hour time frame. So going back to the 4 hours time frame, after a break, what are you expecting? You're expecting price to retrace at a point of interest, right? But the point of interest failed because there was no valid structure in internal movements. Although it will have been a nice win to reward ratio, this single um structure. I'm going to 1 hour to see the changes that we have inside the box. So we can see is after this fair value gap, market created something like an inducement, right? So our inducement is in the another block too. Market did break it before starting to move to the upside. So we know that if market comes to this zone, it's going to retrace to the upside. So following that mindset, we'll go on the 15-minute time frame to look for entry to the upside, because this after an inducement sweep. Now structural shift 1 hour. There is another break that happened to the downside here, and the break continue, and so on. So knowing that price has broken below this, made this internal um structural shift, you go on the 15-minute time frame, because remember we are working with other block here. You go on the 15-minute time frame and try to see if there's any zone of entry at that point. For sales, so observing and knowing that market has made a shift to the downside, we expect a retracement at another block, which we are seeing here. So you will have gotten yourself a nice win risk to reward ratio to the downside, at least 1,000, maybe before your point of interest has been gotten to. So going back to our 4 hour time frame, you can see market made a break to the downside. This break we are seeing here. So what do we expect if it takes to the upside? So you go on 1 hour to look for sales entry at this point. So after the break, we can see market having a, will I call it a favor lookup, but this is the structure that created our favor lookup that we are seeing right. So I was saying, now that we can see what our point of interest after the favor lookup, because price has mitigated the zone before. So what we would expect price to do at this point is that price should retrace from this point because it is after a big build up. But if you notice before during the mitigation of that, so there was a little build up that happened that should confirm that okay, this one is the entry zone. This zone, this zone, just like I explained last time, market moves in three form: accumulation, manipulation, and distribution. This is the accumulated zone. This is the manipulation zone. Sorry, this is the accumulation, manipulation, then distribution zone. So we know after the distribution, we should expect a downward retracement. So cancelling this, we'll take our entry on the 15 minutes, keeping a nice win to reward ratio at 162,000. And you've gotten yourself a nice trade using the same structure all over and over again, and the same understanding all over again. So this over a compound interest. So if you were to analyze this trade, old trade, you've gotten a nice 5 trade in just the December 29. That's from the beginning of December 6 to the ending of December 29. You were able to get a 5 nice win. That is better than having so many losses in the market that you can't even explain. So this little analysis, if you can follow the market in this structure, you'll be able to understand how the market will flow later on. So in our next video, I'll be doing a breakdown of how to analyze the J50 index and the V75 index too. V75 is mostly known for its popularity. So in our next video, we'll be talking about that. And if there's any question that you have to ask, the comment section is there for you to express yourself. And yeah, see you in